Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of enormous losses on the bond markets. But first, China is pushing ahead with its drive for more regional free trade deals that will include New Zealand. The US-promoted TPP may be dead, but Beijing said its plans to finish by year's end negotiations on the Regional Comprehensive Economic Partnership, the RCEP, which is a trade agreement between ASEAN, China, Japan, Korea, Australia and New Zealand and India, and it has flagged that a more ambitious and broader free trade area of the Asia-Pacific. That wants the FTAAP as core to its agenda, and said Australia and New Zealand are countries making efforts to advance this deal. The FTAAP negotiations are coordinated by APEC, whose boss is our own Alan Bollard. And staying in China, they've adopted emergency measures to deal with risks from burgeoning local government debt levels. Meanwhile, data out overnight showed China's retail sales up 10% in October and factory production up 6.1%. Both data series were flat or lower than earlier months. In China, the numbers are always big. New home sales growth slowed in October from a year earlier, suggesting the push by policymakers to rein in runaway prices is getting traction. The value, however, of homes sold rose 38% to $138 billion last month from a year earlier, and that's according to data released earlier today. The increase compares with a 60% rise in September. China's property infatuation is getting crazy. And here's an interesting and disturbing Chinese fact. Half the Chinese population is pre-diabetic, and 1 in 10 have it, almost exclusively type 2 diabetes. According to data released overnight, Japan's economy grew by an annualised 2.2% in the third quarter of this year. This was much better than expected, which was 0.8%. But that does little to alter downward assessments of Japan's domestic prospects, with much of the momentum coming from overseas demand. Indeed, net trade contributed 1.8 percentage points to quarterly annualised growth, with export volumes rising and imports falling in spite of a strengthening yen. Meanwhile, domestic efforts to kickstart their economy continue to disappoint, with both consumer and business spending lacklustre. Bond markets are doing it very tough, and these sharp increases in yields translate into sharp falls in bond prices. So far, it's $1 trillion loss in the bond markets and counting. Some KiwiSaver conservative and default funds will be under real pressure. In New York, the US Treasury 10-year yield has now reached 2.21%, another sharp rise. Our wholesale rates also rose sharply yesterday and may get another push up today, especially at the long end. US benchmark oil prices lower yet again, now down $1 and is now at $42.50 a barrel, while the benchmark is at $43.50 a barrel. We haven't seen prices this low since July. The gold price is lower yet again, now down $7 to $1,218 an ounce. The New Zealand dollar will start today lower than it was at this time yesterday at 70.8 US cents. On the cross rates, it's now at 94 Aussie cents and 66 Euro cents. The TWI is at 75.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.